All right, let's go ahead and get started with today's live session. So welcome active traders to our Trading Week Ahead broadcast. I'm Ken Calhoun coming at you live here with a new set of charts to look at and new strategies fitting our current market. So welcome aboard and good to see a really big turnout in today's session. If we start off with our S&P, you can see we had a really strong breakout. Markets have been at all-time new highs lately. Now I want to start looking at some of these charts for you. And we're going to look at both day and swing trading charts to see which ones have the best trade potential. One of the things I want you to focus on, several strategies. And these are writer downers too, for those of you who are new to working with me. Never, ever, ever trade anything that's in the previous day's trading range. Only, exclusively, trade things that are breaking above the prior day's high. And test this. I trade millions and millions of dollars worth of equities. I know what I'm talking about. Only trade stuff that's 0.2, 0.3, something right above the prior day's high. Those are called out charts. Now, the reason for that, I've got institutional clients, guys on Wall Street. We only put size on. We only start trading large size and large volume when we're outside the previous day's OHLC, or open, high, low, close, right? So we own OHLCs here. We have algorithmic trading, right? You've heard of algo trades. They're programmed. I've seen the programs. They kick in on volume once you're above and stay above the prior day's high for long, or sell under the previous day's low. So that's one simple trick. For proof, go back over your last 20 trades and look at the wins versus the stop losses. I'll almost guarantee you that the vast majority of your stop losses were traded with something that you put on the trade when it was inside the prior day's high-low range. Test it, you'll see. That's one trick. The other is make sure that you're trading early in the morning, say no later than 10 for an initial trade, because it gets more haphazard and random the later in the day you go. So do you buy, sell, or hold charts like this? Well, if it ends, another quick tip, where does it end the day? Okay, whenever I'm swing trading, I'm always doing some maintenance work. The big money traders, it's around 3:15 to 4 o'clock. The last 45 minutes, and especially the last 15 minutes, is where the biggest Wall Street traders put size, especially the last 15, 20 minutes. And that's based on where it closes relative to its previous days or its current day's OHLC. So if we're closing the day at the day's high, that's a place to add or scale in. And you'll often see a high volume breakout and additional price action runs in the end of the day. So where this comes in handy is if, let's say I'm long this A and BS chart. Do I buy it? Do I buy more into the close? Do I sell it all? What's a guy to do in your trades? Well, if it ends near the high, you always want to hold on to it and scale in, because odds are it will gap up on the next day, right? The next trading session Monday, we'll likely see a gap to the upside here. Now, if we end at the low, it's going to be a sell chart, so you don't want to hold it overnight if we end near the low. Now, breakout charts in our current markets tend to run hot. Now, all breakouts are not the same. Often you see straight up breakouts. When I think about filtering what's worth trading, if it's got a spike, avoid spike breakouts, things that go sharply up, because they're, if you weren't already in it, odds are you're not going to get a successful trade-off. That kind of chart's good. That one not so good. So if you're looking for a chart and it's already made a big spike up, it's usually best to avoid that kind of chart and instead focus on charts that are more like this with a nice 45-degree angle, consistent breakout. The reason is those are gradually scaled into. Charts that spike up are often a result of a news release or something else that causes a big flurry of action among the floor traders, but it's not consistent. You get a big spike up, then a fade, then chop. Okay, the better trade is ones that have a continuous move up. You may have some bullish cut patterns, a volume spike, range that breaks the previous day's high, and so forth. So you feed the trade here, you feed a little more later in the day, you tighten up a trail stop, find to take profit there if you're a day trader. Swing traders, you would scale in here into the close. Let me ask a quick question. How many of you add to trades in either add or close? How many of you add to your current trades at the end of the day? How many of you add for swing trades? How many of you build the position at the day's end? Hey, Raymond, how you doing? Hey, Rich. Hey, Steve. Hey, Nan, good to see you. Hey, TJ. Hey, Ray. Hey, good to see you too. So many familiar faces. Great to see you guys there. Occasionally, yeah. And no. sometimes, yes. Okay, thanks. I'm seeing these answers go by. One thing you can think about, remember too, there was no, unlike Vegas or something, there's no rules about sizing. You can size whatever you want. So for example, if you're going to learn a new strategy, say buying into the close, you may want to start with small shares. Let's say I did just say 100 shares in the morning and I'm in the money. How much do I add at the end of the day? Well, maybe just 20 shares or another 50 shares. You don't have to double down. And you should never go above the initial size. You wouldn't do 100 shares and then add two. No, you'd only go 100 and add 20, 50, or up to 100. So small scales is one way to look at position size. Hey, Kat, good to see you too. Wow. And haven't heard you in a while. Miss you. Hey, thanks. Hey, thanks, Dania. Good to see you too. And so many familiar faces. It's good to see you guys with me as we move on. By the way, I like TC 2000. I think that's it. That's the right number. Yeah, TC 2000. And a shout out to Harry Boxer for recommending this. Great chart software. Highly recommend it. TC 2000. Anyway, so does everyone see why this kind of chart is better than any other chart? It's got a 45-degree angle breakout. It's above the previous day's high, and it held on to its high into the close. That's a strong chart. Charts that go up and down, not so much. Charts that go sideways, not so much. Hey, thanks. Hey, thanks, Paul. Appreciate it. Hey, thanks, Matt. Hey, great to see you too. Yeah, thanks so much for all the kind words, guys. Ladies and gentlemen, good to see you folks back too. Yeah. You know, one of the things that I've done during my downtime, my off time, is study the heck out of markets and do my own trades. A lot of trading and a lot of testing. And one of the things that I bring to the party here, both with our Saturday events as well as our weekly live room events, is new breakout strategies, new patterns that are working best in today's markets. We've got a high vol market, high volatility market, and the way to trade it carefully, the way to trade it correctly is make sure that your scanning produces the charts that you know how to trade, right? So for example, range is the most important thing to look at. You want at least say a 10% range on the chart. If it's a $20 stock, I want at least 2 points of range on that daily chart. If it's and oftentimes you'll find, say, a $20 chart with a 1 point range. You don't trade that. Bigger the range, the more profit potential exists in the chart. So let's take a look now. We'll see where things are going. Sorry, Ken. Mike isn't too good here. One thing too that it comes when you come to scanning, you want to look at which charts have a wide range as a setup. And one pattern that I remember teaching, which is a very effective one, is the day after a big range, much like the day after a gap, is often a quiet day. Don't let that fake you out or keep you from trading the chart. Often you get a wide range day. If you look on the candlestick charts, you'll see daily charts, big range day, often followed by a narrow range, doji type day. But the day after or day after that is often another big range day. So you look at, say, a 3-day chart. One thing you can do to help with that is look at have a 3-day chart, so that way you have the big day, maybe you missed that one. The second day, you know, from what I'm telling you, is likely to be a quiet day. The day after that is often the wake up day. It's kind of binary. It's on, off, and then back on. So that's another strategy or another pattern. And look at your charts. We'll see the truth of it. Let's take a look at some other charts. So for example, which ones to not trade? This one is a good example, P&W of Pinnacle West. I would never trade this chart. Why? It fails the range rule, at least 10% range. It's a $70 chart. It better have $7 worth of range. Risk reward, the numbers don't add up. It's not worth trading if the range is too small to make a profit relative to the capital you've got to invest in that to trade it. So for a $70 chart, that's going to be an expensive buy if I'm doing 1,000 shares. I'm risking 76K worth of my capital at work to do what? Make 50 cents? That's not worth it, right? This, on the other hand, is a good one, right? When you're doing your various random scanning, remember that the only ones that you want to trade are ones that are closing or at a 2-day high. So for example, this one would be on the watch list. This is an example of a chief chart. These are not my favorites. The under $5, under $10 stocks often are more inconsistent, but the payoff is huge, right? If you got the $2.50 breakout, it doubled, right? Double your money. But odds are we missed the 2.5. Maybe you bought the 4, you sold the 5, still a good 20%, 25% ROI. So this one would be on the radar for next week because it closed at a high and it's got a wide range, 2.5 to 6. That's a big range. So if you do trade cheap charts, by the way, make sure that all the charts that you trade have at least either 1 million shares per day, a minimum volume, or 15, 20,000 shares per minute, minimum 15,000 shares. What you don't want to trade is thinly traded cheap stocks that are being touted by some Yahoo in a chat room that are thinly traded, that they front run and all that kind of stuff. If you do trade cheap charts, make sure they've got lots of volume and lots of volatility. Word of the wise. This kind of chart's beautiful. This is a perfect chart. It's got a good breakout pattern as well. So as we continue on, patterns here. Let me know if you guys have any charts and I will pull them up and give me some figures. Hey, good. Hey, Dan. Hey, Steve. Hey, Larry. Or SB. Well, I've got SPY. So any stock or ETF charts, let me know and I will go ahead and pull them up and go into a few. Hopefully some good food for thought. The first is don't ever trade when the chart is under previous day's high, right? Only trade charts that are out charts. In charts that are trading inside the prior day's range almost always get stopped out or make much smaller gains on those than you do on out charts. Make sure also you at least a 10% range on average as well. All right. Let me see this. Hey, good to see you too. Well, let's see. I think we're going to wrap up a bit early here. The tip is to visually look at which charts would excite you as a trader. And when you look at the chart, is it something you would trade? And if it's the answer is I don't know, then leave it alone. If it's a chart like this, who can name this chart pattern? What's this chart pattern called? For a gold star. Hey, Darby, good to see you too. Hey, Ash. Hey, good to see you, man. Hey, let's say good to see you too, man. And thanks for coming back, guys. You guys, like Ash has been with me like 24 years, so thanks, man. Good to see so many of you here. All these years, he's back. Happy to see you guys too. But I still haven't seen an answer to this chart pattern. So many of you here this morning. What's this chart pattern? Hey, Avi, good to see you too. Yeah, I mean it. It's good to see so many faces that are familiar. It's kind of you kind of get used to each other, and then I've been gone, and I miss being with you guys. Hey, Matt, love you too. Consolidate. Hey, Wendy, consolidating. Yeah, it's consolidating lately. But the big picture, if we're going to draw lines around this chart, what would it be? It's going up. That's good. Let's see. Yeah, Barry's got it. Ascending triangle. Yay. Points for Barry. It's an ascending triangle. I'm still figuring out how to use this thing, software, so I'm not a draw simple line. Anyway, if we're going to draw lines, it'd be a line here and a line there, right? An ascending triangle goes like this to a point, and you buy 20, 30 cents above the high of the ascending triangle. Or if it gaps up, say on Monday, you buy, say, 10, 20 cents above the high of the gap at 9:30. So that's a good momentum runner. Palantir Technology. Gold has been strong, right? Looking at Newmont Mining there. You know, this is the chart BRBR. Bell Ring Brands, whatever that is. Now, it's an appealing chart. And again, this is a very valuable technique. Get my word on it. I've traded millions and millions and millions of dollars worth of stocks. Range is everything. Range is like your odds that you're being paid off. It's the payoff odds. Yeah, the payoff odds on the chart. This is really bad. Yeah, hopefully I did hit record to the cloud. So hopefully it'll be recorded to the cloud. And I'll send you guys a link. Well, it'll be on my YouTube channel. So if it works out. So So it's like the payoff odds, in a casino. Is the chart look good? Well, yeah, it looks nice. Ding, 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 it's going up. But payoff odds are garbage on this because this thing costs $59 a share. The high is only like 60, so it's like a 1 point range on a $60 stock. That odds is junk because at best you might get, by the way, how much of a range do you think should be your exit target? I say about half the range. So that's why we want wide range charts because the payoff on this is therefore being 50, 70 cents. Not it's no bueno. You got a $60 share chart with only 60-cent payoff. That's junk. If I'm trading a $60 chart, I want $3, 3 sticks as a range payoff. So look at the range, should be at least 10%, and your target on how much you make out of the chart, say buying a high, is about 50%, or about half of the range. Odds are you'll not get the entire range worth of profit, but you may get half. So once it goes to half, I tighten the trail stop, and that usually gets taken out and make money. Cha-ching, and it adds up. So just because a chart pattern looks good does not mean it's worth trading. Okay. No, just because somebody looks good does not mean they're worth dating or spending time with it. What's inside? What's the values? What's the numbers? How does this look? So with this one, the range is on the outside it looks good, but when you look a little closer, you see it doesn't add up. The numbers aren't there. This one on the other end is fine. INSM, same price about. It's a $60 chart, but its range is 62 up to 70. So that's an $8 range on a $60 instrument. So the payoff odds are what? About half that. So if it's got an 8, I used to teach college classes, and it was a lot of fun in Hawaii. But anyway, with an 8-point range, then therefore, how many points of range would be your exit target? An 8-point range. That's called a Socratic teaching method, where you ask questions. Of course, the smart asses say, no wonder Socrates was poisoned, but it's true. All right, Matt's got it. Wendy's got it. Yeah. Good answers. Ding, ding. The smart folks are back. Yay, we're in charge. 4 points, right? 4 sticks. In Wall Street talk, a stick is a point. So 4 points of range. So the best you can get, let's say if you buy right over 70, say 70.5, you'd expect up to the 4 points, maybe you sell at 74, 75. So good. Yeah, 4 points. The tough part about trading is a lot of the training out there is incomplete. They teach you to look for a chart pattern and say, buy the new high. But a real trader is looking at the numbers. What's the payoff odds on the chart? You're always evaluating what's the reward, right? We know what the risk is. What's our reward? Well, it should be reasonable. And so if it's not enough range, there's not enough payoff there. So the internal odds of that pattern, so visually it looks great. Numerically, it's no good, no bueno. Remember, a smart trader always looks at what first? The right side of the chart. Most important, this is very important and valuable that you all learn this. The most important part of the chart is not the pattern of the chart, but the axis on the right, where the numbers are. The numbers are your payoff odds. That's your metric. That's where I get paid as a trader, is playing the numbers. So if the range is wide, it's worth trading. If the range is small, not so much. So this is the first thing. It's not drawn to this, well, a little bit, but the main thing I look at is over here and say, is this worth trading in the first place? That it has to pass that test before I figure out where to go in, right? So if it passes the numeric test, if I've got enough range, then it's worth it. Yeah, Matt's saying agree. Patterns abstract is about points. Hey, you're wearing the sunshine. Hey, how you doing? Hey, Mick, good to see you, man. And took your advice and it worked. So thanks, Mick. Great to see you back, man. So as we contemplate how to make money in this freaking market, remember it's a numbers game. It's a repeat, lather, rinse, repeat what works. Make sure you've got the patterns down along with the range, right? The range is the qualifier and then the pattern, not the pattern and the numbers. You're not saying to yourself, well, it looks like such a nice breakout and you're paying $1 for a $1 range chart and $60 a share. That's not worth the odds because at most you get half the point. So those numbers are extremely important. What else we got here? Remember, so given my rule, is this the kind of chart we want to trade? Dollar General, DG. What's wrong with this chart? 2 critical fatal flaws with this chart. But it looks like such a nice green breakout lately into the close. No, it's a don't trade this chart. This is a dumbass chart. This is not a chart to trade. Right, Ash, it's below the previous day's high. And right, make a zaps there. Who can tell me the top funk song by Zapp and Roger? I'm a musician, so I work some Zapp and Roger. Their song was. So Ash is right, below the previous day's high. Unless it's over the previous day's high and we don't trade it. And the other fatal flaw of this chart is range is no good. For a $120 chart, I want 12 points of range. This thing is what, 125 to 130? It's only got 5 points, so no good. The song would be more bounce to the ounce. I love classic funk. Brick house. One charts that are brick houses too. So 64, 65, nice breakout, range no good. These type of things are what you learn as a member in my live room and the Saturday sessions too. I'm going to give you just a quick, I gave you a quick brief list of rules based on 25 years and worth of millions of dollars worth of stocks traded. If you just put those simple filters in front of your trades, I can't say I guarantee, but I'm very confident that that should cut down on your stop losses and get you in on the charts that actually have a chance to run. Because it's very difficult, right, to trade. So you want to put the odds in your favor. You want charts that have big ranges that you can kind of throw darts at it and still come away a winner. You don't want choppy charts that you have to navigate and hassle. Well, thanks, Mike. I appreciate that. It says I sound very healthy. Well, excellent. Well, yes, we get our webinars in action here. The goal is to give us all healthy charts to profit from as well, right? The great thing about the market is there's so much freaking money out there. It's unlimited. Markets are like money, right? Dollars and wealth is like money. What is it? From the movie Wall Street, like money finds a home. Well, I don't know about y'all, but I want money to find a home in all of our accounts. I want to build our accounts the right way, incrementally, day after day, week after week, with the patterns that make the most sense. All right, well, I think I'm going to wrap up the shindig for now. We're about 20 minutes into it. Thanks to all of you for being here. So yeah, I only talk when I have something to say. Unlike other people, I don't talk just to fill the time. When I'm done, when I've said my piece, I'm done. So hey, Ash, good to see you too. So anyway, coming up, americastoptraders.com. It'll get there soon. America's Top Traders, you're invited. Coming up August 13th, I've got Tom Sosnoff, Steve Nissen, Harry Boxer, Norm Hallett, and Martha Stokes, and one more TBD slot, probably Larry McMillan, coming up on Tuesday, August 13th. Those are going to be free. americastoptraders.com. We're going to be building this out significantly with a lot of new educators. I've got close to 3 dozen, more than 3 dozen. We'll be having up to, my goal is maybe 150 by year's end. So those are free events, and for the live room, you can go to daytradinguniversity.com/live and a money back guarantee for trying the room out. So with that, I wanted to wish you all the best and hope you have great trades in the upcoming week ahead. Take care and best wishes for success. I think we're done. Now, if I can only figure out how to turn this thing off, right? Anyway, y'all have been great and good to see you guys too. I mean that too. It's great to see all the familiar faces from last year and many years. And I agree, Ryan. Yeah, Tom Sazan is very good. He's great. He's brilliant. Sazan knows this stuff cold. I always learn something new from all my teachers and people I work with. Well, thanks, Matt. Yeah, Harry's good. Yeah, Tom's good. All right, thanks, guys and ladies. I will see y'all later. All right, take care and trade smart. Make lots of money out there. See you guys next time. Bye for now.